finding that success in the new normal as part of our economic development week programming and our fall small business roundtable discussion. We have some terrific speakers for today on a couple of different topics we think are going to be relevant for the audience. Just some house rules before we start. We are going to record this session more so for anybody who was not able to join us today, so they have the opportunity to hear from the speakers and learn some of the resources that we have available to them to help their business. If you have questions that you would are posing for any of the speakers, please use the Q&A function. The chat function is really more for operating the meeting, and it's more difficult to follow whether or not the question is answered. So if you have a question, type it in the Q&A. The more specific, the better. If the question is specific to a speaker, and it was either if it gets answered while speaking, we'll move on. If it's something that is relevant to the speaker and had been answered, as time allows, and get to that question. So with us today is Mayor Candace Hollingsworth. Mayor, do you want to say a quick hello?
Sure. And before I start talking too much, can everyone hear me okay? I'll just say if someone can do a couple of thumbs ups or something. I don't know if we have the reactions down here. All right, great. First, good morning. I'm Candace Hollingsworth, Mayor of the City of Hyattsville, and I'm really happy to be here. I'm always happy to be in conversation with everyone, especially since March. Our opportunities to really connect with each other have been so limited, and also just generally strained by the time that we're in and everyone's mental health state. So I hope each of you is doing well, and that you're healthy above all things. Before I go any further, I have to just say thank you to Team Hyattsville. The City of Hyattsville staff has stepped up in amazing ways to do so many things to help, not just residents or, city residents and community partners, but also to help our business residents as well. And this is just one reflection of those things. We have modified the way that we do business, the way that we how well we can ease up on certain things that feel a little bit too bureaucratic at times. And I think in some ways there are certainly some lessons learned, but we just don't know at what point we can consider the end. So at some point we'll say there's an after action review, but we don't know exactly what that end point is going to be. On the call with us this morning, I also have one of my colleagues, Danny Shabley, who's a representative of Ward 2, and Mr. Dan Peabody, who is representative for Ward 4. And so just want to make sure that you guys see that they are here and can answer some additional questions that you might have about the way that the city council does its business. But this morning, or at least COVID in general, has definitely showed us with regard to how we do business development, definitely in the city. And I'm pretty sure this is a lesson that we've seen across the county as well, which is that we focus a lot on how we get new business, and we focus a lot on growing business, but it just highlighted the real need for business retention and the way and how we support businesses that are here and those that go through different waves and phases of their growth. And this is but one of them. And so today you'll be hearing from a number of people that talk about the many different dynamics and aspects of running businesses in stressful times. You'll be hearing from, of course, our wonderful partners at the Prince George's County Economic Development Corporation, our partners at the Small Business Development Center, also have representatives from tax and accounting, because there's so many ways that, you want to make sure that you use all of the options available to you to, no one's trying to short circuit the system, but you just want to make sure that you're setting yourselves up appropriately to be able to withstand things beyond this time and don't run into any additional compliance issues. And then Jim will also give a city update about the programs that we've run over the past, 4 months now, and the status of those programs, and you can be certain that we are taking in the feedback that we get through those processes to figure out if there are additional ways that we can support business development or business retention through our Department of Community and Economic Development at the city. And then lastly, there'll be an opportunity for you all to connect with each other to talk about what experiences you have as business owners, the ways that you might have, I'm pretty sure this word has been exhausted during this time, how you've pivoted and had to change your operations, maybe adjust your ideal client market, maybe even get into an entirely new business line. You're going to hear from some wonderful business owners, 2 women and 1 gentleman that I know we are all very familiar with. But I'm excited to be here with you. Please know that we are taking in the questions and any comments in the chat so that we can, even if they're not answered today, or even if there's just useful information that comes out of those questions, so that we can use that as a way to inform our next steps and inform how we shape our programs and how we reach out to additional partners to be in better service to each of you. So with that, I guess I'll turn it over to you, Jim or Lillian.
Thank you, Mayor. Yeah, echoing the Mayor's thoughts here, we're certainly cognizant of how we need to be flexible and responsive and serve the community. And so I think these past couple of months have taught us how nimble we can be. I think, universally, there's a recognition that coming out of this, there are going to be some lessons learned on how we can operate. And so I think both public and private sectors are going to look very different coming out of this. With that, I'm gonna turn it over to Lillian Lamptey, our community planner. I know a lot of folks on the call have been in touch with Lillian over these past several months, and I think she's done a terrific job in getting our folks engaged. And so Lillian's going to introduce each of the speakers, and then we'll at the end of each speaker's session, depending on pace, we'll handle a few of the questions and answers. So with that, I'll turn it over to Lillian.
Thank you, Jim. Good morning, everyone. My name is Lillian Lamptey, and welcome. This year, we have some exciting things happening during Economic Development Week, one of which is our Fall Business Roundtable. This year's theme, Success in the New Normal, is geared toward technical support offered at every level of government. We hope you'll leave this roundtable with contacts and information that can be used toward making sure you're successful in this new normal. So without further ado, let's go over our agenda for this morning. First, we'll have Alicia Moran, who was the manager of small business services at the Prince George's County Economic Development Corporation. She'll be presenting on state, federal, and local COVID-19 responses, any programs and resources available for our businesses. Next, we'll have Deidre Lee, who is a small business counselor at the Maryland Small Business Development Center. She will be going over services offered through their organization. Following, we'll have Bev Stitley, who is a tax strategist at Saunders Tax and Accounting. She'll be going over the 10 mistakes businesses make that may cost you thousands. Following, Jim Chandler will provide a brief city update on grant programs, relief funding, temporary outdoor seating, and more. And then finally, our business owners will have an opportunity to engage in a peer-to-peer discussion with one another on how we're doing in this new normal, things we may be doing to help sustain business that may be beneficial to our peers. So let's get started with our first presenter, Alicia Moran.
Thank you, Lillian, and thank you to the mayor and the team at Hyattsville. You all are really just a fabulous team, and we appreciate having you as partners on the municipal level, working with us hand in hand as we all address the business needs that are out there today. And I guess I'd just like to say, before I start and get into things, I want to really thank the business owners for, sticking with it. It has not been an easy time, and there are lots of decisions that need to be made. There are lots of opportunities as well. And so there's good news, and we just appreciate the Hyattsville team bringing us all together to celebrate Maryland Economic Development Week and to actually give a little presentation here and update. So the county, as you well know, did have a $20 million grant fund. We were on with the city of Hyattsville previously and hopefully told Hyattsville residents and business owners about this. And so many have gotten some grant money. In fact, 596 business owners actually did get grant money. That's the good news. The bad news is we didn't have enough money for everybody, right? Because there were lots of needs. So not everybody either were able to qualify for the funding, or maybe the funding ran out. So I just want to make sure that you know that we are doing other programs to help all businesses that applied and got money or didn't get money. But the good news is that Prince George's County and the county executive really took the initiative, and $20 million investment was made to the business community. There was also a follow-on fund by the Greater Washington Community Foundation, which was the legacy fund of another $1 million. And in both of these funds, we worked in partnership with FSC First, who actually then managed the process of the loan making, along with many others along the way. So again, that was a grant. I'm sorry, I said loan, but I meant grant. We have with Prince George's, Employ Prince George's, they have been doing hourly relief funding programs and providing $200 Visa cash cards. Many people have been able to take advantage of that. There are other programs that Employ Prince George is doing as well. So I encourage people to take a look at the Employ Prince George website. There is currently a child care recovery fund that is now underway and accepting applications. It's a $2 million grant fund that is providing funding to child care centers and to others, to the programs. So there's 1.4 million targeted to licensed child care centers and 600,000 targeted to registered family child care homes to help these centers reopen. And so you may want to look at our pgcedc.com website and have a look at the guidelines for that if you're a child care center or in-home center. We're happy to work with you directly too if you have questions. We'll go to the next slide. So those were some of the county responses to COVID-19. Of course, both the state and federal government and your local government all responded as well. If you're not aware of it, the Department of Labor still has the Maryland Work Share program. This is a great program that may help you keep your employees paid at a full-time capacity while not having to have you carry the full weight of that. So I'd encourage you to take a look at the Workshare program if you are looking at having to reduce employee hours, but you're trying to keep your employees paid and keep them whole as well. We have the federal programs, which were the Paycheck Protection Program, which hopefully many of you applied for. That program is now closed, but if you received funds, it again can be converted into a forgivable loan if you use the money for the purposes that it was stated. And there are new loan guidelines, forgiveness guidelines that have just been issued, I think last week. So if you look at the https forgiveness.sba.gov website, you will be able to find additional information there. The really positive news is that there is still $170 billion in funds available through the EIDL loan program. This is the Economic Injury Disaster Loan Program through the SBA. Again, this is there is an abbreviated form. So if you want to apply, there is an abbreviated form for smaller businesses that may be just applying for $50,000 or less. There are very favorable terms to this loan, lower interest rate. And again, there's a 12-month payment deferral before you need to start paying back. And it's also a 30-year payment cycle to return, to pay off the debt. So it's extremely favorable. If you're in need of a loan, this is still a great program to go after, and I encourage you to apply. It could take you 2 to 3 months to hear back on the loan. So again, if you're thinking that you need funding or may need funding in the future, I would encourage you to get an application in if you don't already have one in, because that may be the safety net, the cushion to get you through the remainder of the year and then some. Local programs, as you know, your city of Hyattsville has done a great job. If you're listening in from other municipalities, please know that municipal governments in Bowie or Greenbelt or Seat Pleasant, wherever it may be, your local municipal governments may be doing special programs as well to help local businesses. So be sure to check in with your local city officials. Last, I wanted to just mention the state of Maryland has done a lot of programs to help small businesses. They have early on had a grant program that was the first program to open and immediately was tapped out. The money was gone quickly. So they did reopen for a second round. And again, they may continue to put additional money into this. So if you had an application in, don't lose heart. You may still hear something back. There's also a video loan funding available as well. This is like a 5-year loan term. But I just mentioned those 2 websites are great places to go because it relates to funding options that may be available to you, and then also resources for reopening your business as well. If we can go to the next slide. And so the Maryland financing and incentives, these are some of the traditional funds that are out there. But again, I just encourage people to remember that they're there and to look to the state of Maryland as to be a possible source for either grant or loan funding options. If you're an innovator, I'd like to remind you that TEDCO and the Maryland Momentum Fund from the University of Maryland system, can provide funding to innovators who may be providing services that are, or products that are patented or unique in some way, shape, or form. There's also the cybersecurity investment tax credit. There's the More Jobs for Marylanders tax credit, which again is for manufacturers if you're creating manufacturing jobs. And just remember that the person creating the sewing mask, right, creating new masks and sewing them actually may fall into that manufacturing bucket. So just know that there are lots of resources on the state level, and I just encourage you to click on the link from the slide before and check out the different resources that may be available to you. The next slide, please. And so quickly, I'll go through this. The Prince George's County Economic Development Corporation, we managed, again, the business recovery fund that came about, the $20 million fund that we mentioned. But we wanted to make sure that we were doing more than just offering people money, because we know right now it's very important to change your mindset, understand that your customer behaviors have changed, understand that you need to do things differently during this time of COVID. The things that we might have normally done, like gathering large groups of people, we just are not doing that now, right? So certain traditional marketing types of programs we might have done before really aren't the kinds of programs we want to do now. So what we've done is we put together a series of speakers. We have a CEO boot camp for the retail, restaurant, healthcare community, and also a Spanish language boot camp. Now, I'd encourage you, if you've missed any of the sessions, don't worry about that. There's an archive of the sessions. I encourage you to take a look at that at your own leisure. There's also financing programs, because capital matters, capital does matter. And if you've gotten grants, the important thing that you're probably going to hear about later too is that those grants can also be taxed. So you want to be sure to be setting aside funds to pay taxes on some of the grants that you've gotten. I'd encourage you to take a look at the emergestrongerpgc.com website. We've also issued the Buy Prince George's campaign, and this is a great campaign. So if you have a product or service offering, please, I encourage you to go to our website, click the link for the Buy Prince George's program, enter your product or service offering so that we can begin to promote that, and also others can see what's out there, because we're all going to get through this together. We have to support each other. We have to shop local, buy local, support small businesses, support each other as neighbors, look out for each other, right? This is unprecedented times. We also have a Spanish language program that my colleague, Rosia Templo Lopez, actually coordinates, and that's to make sure that Spanish speakers get business information that they may need in their native tongue as well. And then Takeout Tuesday is something that we've been doing, highlighting a different restaurant and takeout situation each week. Next, please. Thank you so much. And so some just additional quick resources that I'll skip through here. Lurch Brewer is a law firm that Innovation Station and Prince George's County Economic Development Corporation has been working with. They actually did a program on the legal aspects of buying and selling a business, because we know lots of people are out there looking to buy a business right now, right? They're looking to start a business, and that's the good news. So we want to help support you. And if anybody's interested in that program, we can certainly share that information. We have upcoming this week, a little later, a program on the ABCs, the elements of companies formation, right? And so that's describing what types of companies are formed and what are the legal elements around those and what do those mean for the business owner. We're also going to have an employment law session and a contract law session. So on our website, you can find all those programs, and I'm sure Lillian may also share them through other social media means to the community there. We do a First Friday coaching session with the University of Maryland Global Campus. They have been kind enough to lend us a business coach, and we've been doing some great programs. So especially during these times where there are opportunities and challenges, it's just a great way to get some support, and it's kind of a network because you're with other business owners. The Maryland Reboot, Maryland Business Reboot program being done by the University of Maryland School of Business is a great program. If you're not aware of it, there are free resources. So they're free sessions. And again, they have archived the sessions, and they're covering everything on marketing and finance to a host of other program sessions. And so I just encourage you, if you haven't been aware of that, be aware of it, because they've really done some great programs, especially on finance and helping people work through the financial aspects of things. And I know that that's being done in partnership with the SBDC as well. The Global Entrepreneurship Week, I just wanted to mention that we celebrate entrepreneurship. We have great entrepreneurs in our community and lots of innovators here. And, it is what makes our community really, really dynamic and diverse. And so there will be a host of workshops, November 16th through the 22nd. And on the 17th of November, Prince George's County Economic Development Corporation and Innovation Station will be hosting a special program with funders. So talking about the Maryland Momentum Fund, the Maryland Industrial Partnerships, TEDCO, and others that might provide funding, the Maryland Manufacturing Extension Partnership, et cetera. But there are programs being hosted by Bowie State University, by the community college, by other stakeholders, University of Maryland, and others. So I encourage you to take a look at the website. And again, you don't have to just do programs here. You could pick a program. It's Global Entrepreneurship Week. So there's a host of programs in there that may be helpful to people. I'll go on to the next slide. And I'm sorry, I always speak too long, I feel like. I just wanted to mention that you see me, but there's a whole team of people here to support you on the county level. So Ebony Stocks is our Executive Vice President. On the top row here, Rocio Tempero Lopez, again, is our Spanish speaker and dealing with the Latino community, business community, and international community. Martin Azima, he again can help. If you're a business trying to do international business, Martin can help you with that. Reach out to us. Larry Hentz has been doing a lot of redevelopment projects, and he has his finger on the pulse of a lot of large redevelopment projects. David Lewis, he works closely, the next row here on the left. David Lewis is my colleague who works with a lot of the federal agencies. And so if you're looking for additional contacts or relationships with the federal agencies, David may be a good point of contact for you. We are working on large projects like to make sure that we are getting new federal agencies opportunities and lease agreements here in the county. Then there's me, and then next to me is John Mason. John deals with the manufacturing community, the construction community, and a host of others. He is really, he's been in the economic development industry for quite some time and is a really great resource. Maya Kapoor deals with our technology community. So if you're a technology company, you may want to work with MIAC. And again, everybody can come through me and I can connect you to the different partners, but I wanted to make sure people were aware that there's a whole team of people with expertise in different areas. On the last row on the left, we have Alexis. Again, Alexis is new to our team. She is handling the healthcare industry. And so there is a lot going on in healthcare. And the healthcare industry has also been impacted by COVID-19. So again, that's why we had the healthcare specific boot camp. We also have Andre Plummer, who's our new finance, and he can tell you more about the tax credits and other things along those lines. Nicole Hall, you may have already been working with. She deals with our restaurants and our retail community, and Crystal Ballard also offers support to us. And that's our team. So we have a great team, and we're here to help both the city and the residents and local business owners independently, as well as through a collective effort with your municipal leaders. The next slide, please. And so again, there are a host of tax credits and incentives on the county level. I'm not going to go into those, but I would say many companies can make leverage of those. And that's when we would coordinate a meeting with you and Andre Plummer so that we can get you to the right programs. We'll go to the next slide. So small business resources. I'm pleased to see that Deirdre Lee is a part of this. One thing that I didn't mention on the Emerge Stronger slide and the COVID-19 recovery program that we put together is that in addition to the CEO boot camps and capital matters, we also have a mentoring program and a counseling program. And I'm pleased to say that our resource partners from both SCORE and SBDC are part of our group counseling session, along with partners from the FSC First, as well as individuals who have marketing and communications background and have like turnaround expertise. So, but just so you know, so I'd encourage people, when you go to the Emerge Stronger website, also look at the mentoring and the counseling options, because we do include some of these resource partners that are on the screen that you see here. And so you may be looking to do business with the county. Again, that's where we'd encourage you to work with the supplier development and diversity team. And just know that the Green Book is now out. And so there are opportunities through the county and our different county agencies. There are different places that you can go to get financing support, including the Maryland Department of Housing and Community Development and other entities. So again, we would just be looking to connect you to these resources. Next slide, please. Just so everybody knows, we also run a business incubator related to Prince George's County Economic Development Corporation. We leverage this to bring in international companies, so it's an attraction mechanism. It may also be an opportunity to bring in businesses from other locations around the country who may want to have a foothold here in Prince George's County, because we're very close to obviously Washington, D.C. and a lot of federal agencies. So it's basically to support our county's economic development mission. It's about job creation and business retention. And so, but through Innovation Station and the incubator, we host a number of programs like some of the ones that you saw previously. Next slide. And so again, just a little bit about that. We would connect you to resource partners. We provide access to business development and financial support. We provide peer-to-peer learning opportunities. But no matter whether you're in the incubator or not, just know that the County Economic Development Corporation is here to help you, and we're going to help you. So I know that these are difficult and challenging times for many of you. And again, I just encourage you to reach out and just know that we're your partner. So the last slide, I believe, is just my contact information. Feel free to reach out, and I apologize. I should have put my number on there. I will put my phone number in the chat just so that everybody has that, and just say it aloud. It's 301-583-4604. And then also my email is a great way to get me, because whether I'm on the phone with somebody else or not, I can always read an email, and that's amoran@co.pg.md.us. And we thank you, and we thank the city for all you do to support businesses, and we hope that this has been a helpful presentation. I would just add one final thing, because I know Lillian wanted us to talk about grant opportunities. And I would just say to business owners to stay in touch, because there are a variety of grant opportunities. And whether they are coming from Target or I Fund Women or Home Depot, you should be, if you're a part of an association, if you're a restaurant and you're part of the restaurant association, stay close to them. They may know who are offering grant opportunities for restaurants. And I would also say stay tuned and watch our website, because additional programs may come online to assist businesses in the coming weeks and months. So with the new CARES funding and other funding out there that is being leveraged both from private foundations and from other community sources, there continues to be a constant churn of grants. Now, some of these come about and go quickly, so you have to be ready to kind of pounce on them when you see them. But I did want to make mention of that. And I haven't put any in specifically here, but I do know that there are opportunities, again, that kind of come and go. So be on the lookout for those in your industry sector. Thank you so much. I hope that helps. I guess I'm turning it back to Lillian at this point to introduce my colleague and partner, Deirdre.
Yes, hi everyone. So next we'll have Deidre Lee, who is the Small Business Counselor at the Maryland Small Business Development Center. She'll be going over services offered at their organization. So Deidre.
All right, good morning, everyone. I'm just going to be kind of brief, and I find that a lot of people and a lot of small businesses do not know what services are available to them. So in this COVID environment and beyond, before and beyond, the Maryland Small Business Development Center is basically chartered and funded through the SBA to provide one-on-one counseling services, training services, loan packaging services to small businesses in our community. We are physically located at the University of Maryland, but have offices through the state. Myself and two other colleagues work at Small Business Consultants in Prince George's County. I happen to work in the southern part of the county, but we serve every area in the county. There are three of us, and one of us is specifically through the CARES Act, so they provide specific services for CARES Act funding. We can go to the next slide, Lillian, or yes, and so our services are pretty much threefold. So the first is business consulting, business counseling. We do everything from startups to like growing medium-sized businesses. In the COVID environment, of course, a lot of our work has been geared on making sure that businesses know what resources are available and how to apply for them. And so, as Alicia spoke about, the EIDL funding, the grant funding, the PPP funding, the PPP forgiveness, a lot of times through the webinars, the information, it's pretty overwhelming. And so where we come in is that we provide one-on-one counseling and consulting to small businesses to make sure that they're aware of the opportunities, also to deal with issues like making sure the business is registered properly, that the business is in good standing, working with your city, your local jurisdictions to make sure you have the proper business licenses. So it's just like that startup and that growth support that businesses need that we offer in a one-on-one environment. And also it is confidential. So stuff that's shared comes between the SBDC and the client, and that's pretty much it. In addition to doing one-on-one consulting, we also provide a bevy of training services, everything from registering your business startup, to applying for patents, to 8A certification. And so a lot of what we do is training. Most of it, and in fact, all of it is online now. And I know that people are webinared out, but we do have specific modules for certain things like social media and other things that help support and kind of grow your business through this environment. The third tier, and possibly in this environment before and after, the most important thing that we do is we look at businesses and work with them to get them ready for financing. For, in this environment, stability financing, but also for growth financing. And so in addition to the COVID-related loans, grants, and other opportunities, we also look at opportunities through the SBA, CDFI organizations, and basically package the business and prepare the business for lending. For some businesses, that's a 3 to 6 month process. For other businesses, it may be a 2 to 3 year process. going from the business plan actually to the financing and partnering the business with the right funding organization. And so those are kind of our threefold services. Like I said, we are available throughout the county and have consultants in different areas of expertise throughout the state to make sure that businesses get the support and the services that they need. And we can go to the next slide. And then this slide just is our basic contact information. Our website has information on how to register for consulting services, what training is available, and other resources that are available to small businesses in our area. And then again, my personal contact information. You can always reach out to me for specific questions, opportunities, and that's pretty much it. So that's just the overview.
Thank you, Deidre. Next, we'll have Bev Stitley, who is a tax strategist at Saunders Tax and Accounting. She'll be going over the 10 mistakes businesses make that may cost you thousands. Bev?
Thank you very much. So business mistakes, tax mistakes that business owners make. So how many of you think that you pay too much in taxes? Maybe you know you pay too much in taxes. Well, there are things you can do about this, and that's what I want to talk about today. This is normally a presentation I do for the SBDC. I do a presentation every month for the SBDC. This is one of 4 or 5 that I do with them. And normally this is a 90-minute to 2-hour presentation. So we've given you the presentation. I also will place into chat a link for a one sheet that you can just have a summary of the presentation too. So I've added that to the chat. But we're going to go through a couple of these. I'm going to mention all 10, but since we have a shorter amount of time for this presentation, we're just going to focus on what I feel are probably the 2 biggest ones that I get asked questions about when I do these presentations. I think these are the ones that spark people's imagination. So let's go ahead and go to the next slide. So the first mistake people make is failing to plan. When you think about taxes, many of you will think about getting everything together for your accountant in January, February, March, up to April 15th. Hopefully you're not one of those extenders that just filed your tax return last week. But that is actually recording history, is what was done, is what happened by December 31st. If you really want to have an effect on what the bottom line of your taxes, one of the largest expenses a business owner has, you need to plan. So the biggest mistake people make is failing to plan in advance, knowing what strategies they're implementing, because many of those things need to be implemented into your business before the end of the year. Some things need to be done at the beginning of the year. There are different due dates depending on what you are doing. So Supreme Court Chief Justice William Rehnquist said there's nothing wrong with strategies to avoid the payment of taxes. The Internal Revenue Code doesn't prevent that. We have so many things in the IRS code that we can do with our businesses if we only realize how to apply them and what they could be. And so knowing what fits your business, because none of these is a one size fits all. So we deal with a lot of different types of businesses. We deal with everything from that sole proprietor that is just starting off to that partnership or S corporation or C corporation that's been in business for a long time. And everybody has a different strategies that will fit for their type of business. And so knowing those things and what you need to do in your business is where our mistakes happen. Next slide. So our key to tax planning is knowing the plan. So there are 2 ways you can affect your business. And forgive me for using a football analogy here, but you can go on offense or you can go on defense. And so offensive things that we do are things like our marketing strategy and how we get the word out about what we do. Defenses is tax planning. So I can't guarantee results with an advertising campaign, but you can guarantee results that if you use this tax strategy in your business, it can save you X number of dollars. There are things that we can do that we know will have that effect. So in 2017, we had the Tax Cut and Jobs Act of 2017 that went into effect in 2018. It is the largest tax law change in 31 years. And so it has a ton of new things in it. There were old things already in the code of things that we could do, but there were a lot of changes that happened with our 2018 taxes. And even in this year, with every one of the federal bills that were either a CARES Act or a HEROES Act or anything that was trying to do some type of stimulus, in each one of those bills, they have added anywhere from 6 to 20 tax law changes. So things that have happened, even this year, things have changed quickly, and staying up on those and what would affect you as an individual or you as a business. So knowing those things. So let's just do a real quick summary of how the tax system works. Next slide, please. So think of your 1040 tax return, basic return. That's where the bottom line will hit all of us. This is how your tax system works. You add up all the income from all sources, and that is everything. So W-2 wages, profits from a business, investment income, capital gains for stock sales or real estate sales, all of your types of income are added together. Even gambling winnings and illegal income have to be reported on your tax return. Remember, that's how they got Al Capone. He didn't report his illegal income. So all the income gets added up from all sources. You get to subtract to that some basic adjustments to income, such as your IRA contribution. For you as a business owner, this would be your contribution to a SEP or a simple plan. Your health insurance, your self-employed health insurance deduction would be in here. There's a few things that are called adjustments to income, and you would be used to hearing them called above the line deductions. One of the new above the line deductions is a charitable contribution. So previously, charity always fell under our itemized deductions, and it still does. But for those that can't itemize, that are taking the standard deduction, there is now for 2020 a $300 limit of an above the line deduction for charitable contributions. So something that was added on one of our CARES Acts with a tax code change. That gives us our adjusted gross income that we then subtract from that either our standard deduction or our itemized deductions, take whichever one is higher for you. That gives us our taxable income. We look at the tax table, determine based on what tax bracket we are, we calculate what our taxes are, and then it doesn't stop there. We then can subtract certain credits from our taxes. And so whether it is family related credits like our child tax credit or our daycare expense credit, we have education credits in here, we have general business credits. This would be like where your ADA compliance credit comes in. We subtract those from the taxes, and so that gives us a new tax liability. We add any additional tax. For those of you that are sole proprietors or partnerships, this is where your self-employment tax comes in, the equivalent of Social Security and Medicare that you put into the business. Any additional taxes, such as you pulled money out of an IRA account and you're under 59.5, and there's a 10% penalty. So here again is another place where the CARES Act has given us another tax benefit. Were you aware that here in 2020, two things have happened to our retirement money? One, if you're already in retirement age and required to take your minimum distribution, in 2020, you no longer need to take your minimum distribution for this year. And if you've taken it out, you can put it back, so you can undo that. But I think one of the biggest things that I've seen my business owners take advantage of is if I'm under 59.5 and I have retirement money such as an IRA account, I can take out money from my IRA account here in 2020 up to $100,000 if I have been affected by COVID. And affected means having it, a family member having it, et cetera. But then one of the reasons, qualifications for being affected for COVID is that there has been a financial change because of COVID. Did you see revenue drop when the pandemic happened? Most of us have. We've seen a reduction in hours, we've seen being closed down, we've seen something change in our revenue because of that. That trigger now allows me, if I would like to take up to $100,000 out of my IRA account here in 2020, I can do so, one, with no 10% penalty for early withdrawal. Okay, great benefit right there. A lot of the reason why none of us ever touch our retirement account when we need it for something else. And then the second option is how I claim that as income. We can now either claim that as income over 3 years, claiming a third of it each year, 20, 21, and 22. And by the end of that third year, if we put the money back into our IRA account, it is treated like a rollover. So normally when you do a rollover from your retirement account, you have 60 days to put it back in. You actually now have 3 years to put it back in. And it is no harm, no foul, nothing taxable. You would go back, if you don't do it to your third year, you could go back and amend the prior returns and take off that third of the income that you claimed. So again, one of the great tax benefits and strategies that will only be for 2020. You need to know this now because I'm sitting with you in January to do your taxes. It's too late. You had to have taken the money out in 20 to get this benefit. And then bottom line, after you take any additional taxes, you then owe them a check or you've already paid enough in with your estimated payments and you get a refund back. All right, next slide. So one of the things I did want to mention about the Jobs and Tax Cut Act, the biggest change on this that has affected individuals is the change in standard deductions. So this shows you what the standard deductions will be for our 2020 returns, and the smaller box shows you what the standard deductions were previously. So they were almost doubled. And so what we used to see about every 1 in 3 taxpayers itemizing on their tax return and being able to claim that mortgage interest, real estate taxes, charitable contributions, that type of thing, has gone away because I'm now seeing 1 in 10 people being able to itemize because that standard deduction has increased so much that the standard is better than what I can do on itemized deductions. And so this is on the personal side, but that really is where your bottom line of taxes get paid at in a lot of times, especially if you have a pass-through entity like an S corporation or a partnership. Next slide, please. Okay, mentioned the itemized deductions. So some of the changes that happen with the itemized deductions, we can still do medical, has to come over 7.5%. Your taxes, state and local taxes, limited to 10,000, they've capped that. Interest, only what was used to buy, build, maintain, or improve your home. Casualty losses are still there, but only if you're a federally declared disaster area. Charitable gifts are still there. They actually is for 2020, again, from the CARES Act. This used to be limited to 60% of your adjusted gross income as the maximum you could take in charity. You can, for this year, give up to 100% of your income as charity. Don't know that we have anybody that wants to do that, but it's not giving you any limit. And then what has been eliminated here has been most of the miscellaneous deductions. There's no more employee business expenses. There is no more investment fees. There's no more tax preparation fee on the personal side as part of itemized deductions. Next slide, please. So keys to cutting taxes, and as we do our planning, it really falls in 4 areas. There is timing of receiving money. You all are kind of used to that because probably all of you have participated in some time in something like a 401k plan, where it's deferring when you're going to claim it as income. It's subtracted out of your income here in this year. It's not part of your W-2 number, and it would get added to your income the year you start actually pulling the money from your retirement account. So that would be a 401k plan, putting money away into an IRA, anything that is a deferred compensation. So timing of income is important. One of the things you can do right now with timing of income is, can I be timing my income or my expenses here for 2020? And so that might be part of a strategy planning to do. Shifting income. Can I shift income to another family member in some way that is in a lower tax bracket? So can we do those? And so we'll talk about some of that possibility. Actually using the tax code itself. So the tax code itself has a ton of different possible things to do. There are your basic little things. You're just talking about doing a charitable contribution. That's a rule in the tax code. Doing your standard mileage deduction, a rule in the tax code. But doing something that's more advanced than that, doing a conservation easement, actually buying into a conservation easement. Not that you have land right now that you're going to put in, but you can buy into a conservation easement and get that benefit. If you have a business or a facility that you're wanting to sell, structuring that as an installment sale, structuring that as a monetized installment sale, or even doing a 1031 exchange. Those are all things that are inside of the tax code. There are different products that you can use, and a lot of these will involve some insurance products, and we're talking about some whole life things that you could be doing a key member insurance, and then taking a deduction on the business, but then you can take a loan against that insurance and so still have the money available for you to use. There are things called a CHIC where you're doing some self-insured investments, and they can be a good benefit too. But most of the things we're going to talk about are going to be into the code, but these are all keys to cutting taxes. Next slide, please. So the second mistake that people make is they are afraid of getting an audit paranoia. Now, I am never advocating that you do things wrong on your tax return, but I am letting you know that your chances of audit are small, and because IRS can only do so many. Don't know how many they can be doing in this next year. They are right now at a 5 million letter backload of incoming mail that they still have not opened because of the shutdown. But fearing your audits, need to do what's right, but understand certain things have a higher audit risk than another. So I listed here the Schedule Cs of different sizes. And if you're in that size, that 100 to 199, just under 200,000, you have the highest risk of being audited, but still that's just a little over 2%. But Schedule Cs have a lot higher risk of being audited because we don't have any backup information for that. And there's not that formal structure that you see in a partnership or a corporation. When you're looking at partnerships and S corporations, less than 0.5% of those are ever audited. So knowing that that is something you don't have to worry about, I'm going to tell you though, as I have done audits with IRS, as long as you have done what you needed to do, the letters from IRS that come out tend to be asking for more information. They can be scary letters, but they really are just asking for more information. And so 95% of the letters that clients get that are from IRS, all we need to do is give them an additional bit of information and everything is fine. So shouldn't be paranoid about audits. Next slide, please. Having the wrong business entity for what you're doing, needing to know what would best suit you, where you're at, and the type of business you have, and the revenue level that you are at. So tax structures for businesses, you can be a sole proprietorship, simplest method of business that there is. On the federal level, there's nothing you need to do to become a sole proprietor. And on the state level, it only depends on if you need something like, your electrician's license or something like that, but you need to register with them. But sole proprietorship, simplest form to do, simplest to get in, simplest to get out. Partnerships, when you have one or more people in the business, owners, they're by default going to be a partnership. S corporation, a pass-through entity, just like a partnership is, both S corporations and a partnership file a return and show their income and expenses, but pass the income over to the individuals, the shareholders, the partners. And then you have a C corporation. When you think C corporation, think AT&T. It's going to file its own tax return. It pays its own taxes. It has shareholders that it pays dividends to because they've invested in stock. Some of those shareholders may be running the company and they're going to be on payroll. But the C Corp files its own tax return, pays its own taxes, doesn't push anything over to your personal other than your W-2 wages and dividends that you may get. By the way, dividends are not a deduction for a C corporation. So when a C Corp pays dividends out, the shareholders are also paying tax on those dividends. The corporation has already paid tax on that money. That's where we talk about the double taxation of corporations. But not having the right entity structure for where you're at is one of the biggest mistakes that I see. Notice on here, I did not list a business entity structure of an LLC. To IRS, an LLC is what is called a disregarded entity. It does not have a tax return to file. It doesn't have its own format. IRS just simply disregards an LLC, and it states that if you're a single member LLC, one owner, you file as a sole proprietor. If there's more than one owner, so a multi-member LLC, you file your tax return as a partnership. And that's all it says. So there is no tax advantage to becoming an LLC because it doesn't change anything about how you're doing taxes. So a lot of people have that mistake. Next slide, please. So I want to give you an example of how entity structure can make a difference, okay? So if you're a sole proprietor, you're going to report all of your income on your personal tax return. You're going to do a Schedule C form. Schedule C form is going to list your income, list all of your eligible expenses, bottom line, profit or loss. You're going to report all of your income there. Go ahead, next slide. So that income gets added into your total income. And so you pay income tax on that based on what tax bracket you're in for the total income on the tax return. Next slide, please. And it pays 15.3% on the profit of that business, that Schedule C. 15.3% is the Social Security and Medicare tax. It is the equivalent of the employee and the employer side, and pays taxes. 15.3%, doesn't matter what tax bracket you're in, pays it on the whole amount. Next slide, please. So I want to use an example here. Let's say that this person has bottom line profit after expenses of $80,000 in their sole proprietorship. They're going to pay $11,304 in their self-employment tax, their Social Security and Medicare. So they're netting from that $68,696. Now they'll also pay whatever income tax bracket they are on that $80,000 too. But Social Security and Medicare alone is going to be $11,304. Next slide, please. But what if we did a different strategy? What if they set themselves up as an S corporation? In an S corporation, you put yourself on payroll. By the way, sole proprietors and partnerships never get a paycheck W-2. Not allowed. But at a corporation level, an S corporation, I can set myself up as a employee, should set myself up as an employee, need to set myself up as an employee with a reasonable compensation. Next slide, please. So when I do, part of my income is salary and part of my income is just the income profit, I'm going to pay income tax on both because income tax gets paid on everything. Next slide. But I only pay Social Security on Medicare on the part that is salary. I don't pay it on the profit from the S corporation. Next slide. So I avoid the income tax on that half. So if I would, in this business, say that the reasonable compensation for me is $40,000 for what this business does, I would have to pay somebody $40,000 to do this business. I could give myself a salary of $40,000, and then the S corporation would give me a K-1 for the other $40,000 of income. And so I would, on my tax return, still claim a total of $80,000 of income for income tax. But I'm only going to pay Social Security and Medicare on my salary. Next slide. So salary of $40,000, I would pay $6,120. I would be netting the $73,000 on the same $80,000 profitable business. If I was a sole proprietor partnership, sole proprietor paying my SC tax, self-employment tax, I would pay $11,304 because I have to pay on the whole $80,000 profit from the business. So the difference between the two made the same amount of money, had the same amount of sales, same expenses, but the difference between the two, by being an S corporation, I just saved $5,184 in Social Security and Medicare taxes in that current year, and that would be true for every year that I am as an S corporation. So it can be a really great strategy to do, to look at, should I be switching over to an S corporation at this time? Next slide, please. So got to remember to take reasonable compensation on this. A study of reasonable compensation tells us a reasonable compensation is usually about 32% of the overall profit for the business. That is just general. It really depends on where your business is at, because you also want to be doing think of what it would cost for me to pay somebody to do what I do in the business. So you really need to have a firm definition of what your reasonable compensation is, but don't try to go cheap because you're just going to give yourself trouble. Okay, next slide. Remember those audit risks that we were talking about? That S corporation has a much lower chance of being audited too. So one less thing to worry about. One less thing. S corporation is not a fix it for everyone. You need to understand your requirements. Next setup. Next slide, sorry. The setup requirements, you have to register the entity with the state. You have to obtain an EIN number. You have to file your S-election form with IRS. Next slide. You will have quarterly maintenance to do because you've got to do payroll now. So 941, state unemployment, workers' comp premiums. You make sure you need to pay your estimated taxes, which would be true no matter what entity you are. Next slide, your annual requirements. Filing your W-2s and W-3s, your 940 report for federal, your tax return, which is an 1120S for your federal side, and then your state return. And you have your corporate formalities. I mean, once you set up a corporation, you are setting up a structure that has requirements such as having an annual stockholders meeting, that type of thing. So making sure you stay in compliance that way, because then you start losing your liability protection of the corporation if you don't treat it as a corporation. Another reason I don't like clients taking money out of their businesses, just paying personal expenses out of the businesses. Take the money out, put it in your personal account, pay your personal expenses over there. Okay. Next slide. The next mistake that we see is people missing on maximizing their qualified business income. So that Tax Cut and Jobs Act of 2017 reduced the C corporation's tax rate to 21%, flat tax now. It was a stepped tier up to 35%. And the equivalent of helping out the other types of businesses was a new deduction called a qualified business income deduction. So it's available to sole proprietors, partnerships, and S corporations. It's a credit on your personal return level. So as your S corp and partnership flow over, that's where you get the credit, but not maximizing and understanding how this credit works. It is a 20% credit. 20% of the profit from your business can be this deduction for you, and you need to understand that and maximize that in any way that you can. Next slide. Next mistake that I see business owners make is that they have the wrong retirement account. There are several different types of retirement accounts that you can do. The simplest ones are a SEP or a simple IRA. These would be very low fee returns types. It's only going to be whatever your IRA expense is, the annual maintenance fee in the account, so $75, $100, something like that. They have two different purposes, but they will allow you to put more money away than what a just regular IRA does. You do also have the ability to do different types of 401k plans, which will allow you to put more money away. You can have a solo 401k, you can have a defined benefits plan, which would allow you to put even more money away. Your caution with your type of plan is really looking at your business structure and what other employees you have in the business, because most of these have non-discrimination rules. So when you're putting money away for yourself, you also have to be putting money away for employees. Okay, next slide. Missing family employment. So this is one that really applies to sole proprietors, partnerships where both partners are the parents of children, and hiring your kids in the business. I get lots of questions about this one because the strategy can be really very, very strong. So if you are that sole proprietor, we have a good business that's paying a good, showing a good amount of profit. Before I would switch you over to an S corporation, I would first make sure that we are taking advantage of this. So can you hire your kid in the business to do any work in your business for you? Can they do website work for you? Can they be doing some office work for you, depending on the type of business you are? Can they be doing some advertising for you? If your business is property managed, can they be mowing the lawns at the facilities? So real work in the business. We're not looking at just paying them just to pay them. The strategy really needs to be meaningful work. That's the reason the first thing is under age 7 doesn't work. And I apologize. I know your little Susie and little Johnny are really adorable, but paying them $12,000 a year for their picture to be on your advertising doesn't cut it. You will lose in court cases with IRS with that. They have to be able to do something meaningful in your business. And so we see court cases under the age 7 that are really not working at all. You need to be paying them a reasonable amount for what they are doing in the business. Because if you're an unincorporated business and they are your minor child, you do not have to hold out Social Security, Medicare, or pay federal or Maryland unemployment on them. So you really are just straight paying them, but you have to be paying them a reasonable wage. You have a written job description, you're keeping a timesheet, You actually write a check to your child, putting it into an account that is in your child's name. The first $12,200, the standard deduction for 2020, will be tax-free income to them. They can make up to $12,200 of earned income and not even have to file a tax return, not pay any income tax. So you pay them $12,000 because they're doing your Facebook posting for you on a regular basis, and Twitter and Instagram. They're taking care of those things for you. I'm telling you, you got a 16-year-old that can do that. They will take care of that for you. You pay them a reasonable amount. So look at what would you pay an outside agency to handle that, or an administrative assistant to handle that. And maybe you give them just a little bit less than that. You end up paying them $12,000 for the year. They don't claim anything on taxes. They don't have to file any taxes on that. And that is a $12,000 deduction on your business, right? A business expense. $12,000 goes into that account with the child's name on it. And what can they do with that $12,000? Well, really almost anything. So you really can't take money out of that account to meet your normal parental responsibilities, so putting a roof over their head, food on the table, that kind of stuff you can't do. But you got a 16-year-old daughter that likes to do riding lessons, does horseback riding, that $12,000 can go a long way to getting her the equipment, helmet, boots, et cetera, that she needs, paying for those riding lessons. You got a kid that does soccer teams that's traveling, yes, that could all be paid out of that account, because that's not a parental responsibility requirement you need to do, but it's things that we do, and that can be paid for out of their own account. They can save up for that car that they want. So et cetera, those types of things. So this can be a really great strategy for, as I said, an unincorporated business, sole proprietor and partnership, because they don't have to do any Social Security and Medicare tax. This can also work in a S corporation or a regular corporation, but you are then going to have to do Social Security and Medicare off of those. So that still is a strategy, doesn't save you quite as much. And even if I paid them more than $12,000, that next $9,700 of income, they would have to file a tax return, but they're only going to pay 10% tax on that. And so if you're in like the 28% tax bracket, look at the difference between paying 28% or 10% on that next $9,700. So that is still money that you are going to be using and spending. Is a great strategy for our business clients to do. Wish I could ask for questions. That is always one that gives me lots of questions. Let's go on to the next slide. All right, number 7, missing medical expenses. Again, another strategy in a couple different ways when we talk about missing medical expenses. First off is our health savings account. So if you have a business and you have a health insurance that is a high deductible health insurance, and so this really works for whether you're an employee or an employer, having a high deductible health insurance, you can also do an HSA account. So HSA accounts for 2020, if you're under the age 55, you can put $3,550 away in it for an individual, or for a family, $7,000. You get a bump up of $1,000 if you're over 55 onto that. When you put that money away into that account, it can be done one of two ways. If you have a business where you have a paid check, so you're one of those corporate levels, it can be a payroll deduction when you're a C Corp. When you're an S Corp, it actually is treated as a shareholder's distribution and is deducted as an adjustment to income on the front of your return. If you're an employee, otherwise not the owner, it's a payroll deduction for you that is not taxable income. So either whether you're doing it as off the W-2 or you're taking the adjustment to income on the front of the 1040, it's as you put the money in, that is the deduction, not when you spend it for medical expenses. So it reduces your income for putting it away. As long as you pull the money out of the HSA for paying medical expenses, it is not taxable. The investment companies have really started seeing the advantage of these HSA accounts, and we are seeing a growth in investment companies, Edward Jones, Merrill Lynch, et cetera, those types of things, of creating HSA accounts where they're at, and they invest that money. So you can actually get a nice rate of return on this. It stays in that HSA account. Okay, when you pull money out of that HSA account before retirement age, and it's not for medical expenses, Think about pulling out of an IRA early. It is taxable and will have a penalty for pulling it out early. If you leave the money in there, don't really use it for the medical expenses, you have that ability to do that, it really just continues to grow like an IRA retirement account. And when you hit retirement age, you can pull the money out of the account for non-medical expenses, and it's just like pulling money out of an IRA. Many of us, our income is too high on our 1040 return for us to put money into an IRA account, but there's no income limit for putting into an HSA. So if this is one is to be a way that I get around that being able to put money away for retirement, I can do it with an HSA account. Again, you must have a high deductible health insurance to do this strategy. And so that would be a requirement to have that. But you start chunking that money away into the HSA account. I started doing this about 5 or 6 years ago. 2 years after I did this, my husband needed to have surgery, a partial kidney removal down at University of Maryland. Had a high deductible insurance. My high deductible was $6,000. That's what I chose. And I had the money in my HSA account when the bills came in. There was the $6,000 that paid it. Insurance covered all the rest of it for us. So it was a great thing to do, to cover yourself and lower your premiums for that. Another strategy for medical expenses is hiring a spouse in the business and doing a medical expense reimbursement plan. Or if you have a C corporation, you can do a medical expense reimbursement plan for yourself. Great strategy that you can take as a business expense the employee's expenses. So if I'm hiring my spouse in the business, that would be my husband's expenses. And under that, I can reimburse him for his expenses, my expenses, and his dependents' expenses. So the whole family's expenses can be reimbursed under a MERP, Medical Expense Reimbursement Plan, of Section 105. Great strategy. Wish that we had some more time to go into that, but we don't. Next slide, please. Okay, missing home office expense. I was actually told someone this, and they were surprised that people actually miss a home office expense. People don't do a home office expense because they're afraid it's going to increase their risk of audits. It does not. A home office expense is a little deduction on your business return. It is a small deduction. The best part about a home office expense, though, is it increases how many miles on your vehicle you can claim. If I don't have a home office, me leaving my house and going to my first stop of the day is commute and is not deductible. And then from the last stop of the day home is again commute and is not deductible. But if I have a home office, I don't care how small it is, it can be 10 square feet. If I have a home office, then I am leaving my office to go to that first stop of the day. That is business miles and deductible. And then back to home is coming back to the office, business miles and deductible. So it's a small deduction for the home office itself, but it can greatly increase your number of business miles you can be taking on your tax return. All right, next slide, please. Missing business meals. Rules have changed about what business meals are deductible. Now, rules that have always been the same is if you're just stopping for lunch today because you're out and about and running around and you grab yourself lunch, that's not deductible. That's not a business meal. There was no business purpose. There was nobody you were meeting with. That is not a business meal. That's just you getting lunch and it's not deductible. But if you take a client out for business, a prospect out for business, and you have a discussion on business, 50% deductible has always been. Same thing. All right, transportation to and from the businesses, that's 100% deductible. Entertainment expenses are gone. We'll talk more about that in a second. The biggest one that changed for me that made a big difference, my office parties, picnics, the Christmas party, for me, the end of the tax season celebration, still 100% deductible. When I travel away from home, like I go do a seminar or something, someplace where I'm required to spend the night, all of my meals are deductible. I don't have to have a business purpose of that meal. Office meetings with employees, directors, shareholders, still just a 50% that's a business meeting. But the ones that is supper money or the employer convenience meals. So for example, here at Saunders, if we're working extra, and we do this all the time during tax season, I will bring meals in for the office twice a week. And that used to be 100% deductible. It is now only 50% deductible. And so when you provide that extra meals because your staff are working overtime, or we're going to have a business meeting and doing it over lunch, 50%. You do coffee, snacks, etc., things for the staff in the office, 50%, no longer 100% deductible under the new rules. Don't be surprised to see some of that change with the next code that's coming out. They're talking about it again, but that's where we're at right now. Next slide, please. I had mentioned entertainment, and that whole change in the 2017 bill, business entertainment went away. Now, the most common one we think of is taking a client golfing. So that's why I use that on the slide, but this is anything. So taking them to a ball game of some type. Business entertainment is no longer a deduction. You can still do it. I mean, it might make good business sense, especially if you get revenue out of it, you would still want to do it, but it is no longer deductible. It would be a non-deductible expense for you. Next slide. All right, going back to number one, missing planning services is the biggest mistake that people make, is not planning ahead. So you need to do some planning on that. Want to take just a minute and talk about, next slide, please, things with the PPP loan. So ever-changing rules for PPP loans. So if you guys have been paying attention to this from the beginning when these loans first started coming out, we had the first loans that you had 8 weeks to use it up. We got new rules in June, and now we had 24 weeks that we could use it up. We could choose either the 8 or the 24 if our loan was before June 5th. After June 5th, you're just with the 24. There is no picking anything else for that. They reduced the requirements from 75% to payroll to 60% for payroll with the 24-week. There is still a lot going on with this. Just 2 weeks ago, there was from the SBA and the Treasury Department an agreement for any loans under 50 to have an even simpler forgiveness process. And so that was reduced. So previously when we were gonna have to show our full-time equivalents and the hours and the number of workforce and whether we reduced or not, that has gone away for loans under 50. It will simply be a statement. I believe it'll actually be an affidavit that you have to attest to that you spend at least 60% of the money on payroll, and a couple other qualifications too, but it has become a very simple method for that one. It is a question though of whether you want to apply for the forgiveness here in 20 or 21. Before I go into that, let me back up to this $50,000 forgiveness. We have all been hearing in the news the past couple of weeks, and whether you want to call it another CARES Act or a stimulus act or something to promote, to boost the economy that has been going on in Congress. We're hearing Democrats and Republicans having a difference of opinion and needing to reach a compromise. And I don't want to deal with political sides of any of that. But in both sides, so they have both agreed on that this amount should be $150,000, not $50,000. So if this passes, if they actually get it passed, they both have agreement on that for giving below $150,000. We should be watching for that. So I'm going to tell all of you right now, don't rush to get your loan forgiven. That is my recommendation to all of my clients. Do not rush to try to do paperwork to get the loan forgiven. I believe something will actually finally come through at some point, whether it's before or after the election. I don't care as long as it comes through before the end of the year, and move this up to $150,000. And even if it doesn't though, you still have plenty of time to get your loan forgiven. You have 10 months from your loan origination date to start the process on your loan forgiveness. So that is going to put you, and I'm sorry, so from the end of your 12 weeks. So if your loan, when your loan started, you have your 12 weeks, and then you have 10 months from that to do your loan forgiveness. So this is putting you in well into 2021 before you're required to do it. And that has started becoming one of the discussions of whether I want to take the forgiveness in 20 or 21. Okay, so when the CARES Act came out and these PPP loans came out, the loan is not income, which a loan is never income. A loan is never income. So that's not exactly what they said. What they said was the forgiveness would not be income. So that was the thing that is different, because normally if you get a loan forgiven, you have to claim that as income. All right, so the PPP loans have been ruled that they are not, the forgiveness is not going to be income. What did not get stated in the original bills and is in this compromise that we're looking at is whether or not the expenses you pay with that loan money are still business deductions. So a couple weeks after the PPP loans came out, those rules came out, the Treasury came out with their announcement that based on, and it is a standard IRS rule, that if you have expenses that you pay and you paid it with money that is not taxable income, you can't deduct the expenses. So if my loan is forgiven here in 2020 and it paid payroll for me, that amount of the payroll that I used for the loan can't be a business expense for me. Let's go to the next slide and let's give you some numbers to see how this is happening. Okay, let's try to do some easy numbers. Let's say you have a loan, PPP loan of $65,000, all right? Your gross revenue in your business, $250,000. That does not include the loan money that you got, because a loan is never income, okay? I have operating expenses in the business of $150,000. So that's going to be my payroll, utilities, supplies, advertising, you know, all of that stuff. That leaves my business with a bottom line profit of $100,000. Okay. If I have my loan forgiven here in 2020, and in that $150,000 of expenses were $65,000 that I paid that included payroll and utilities and rent or mortgage payments, things we were allowed to use the PPP loan for, I have to take them out of my expenses. So I am now going to only have $95,000 expenses. So I'm going to have a taxable profit of $165,000 instead of $100,000. Okay. Things to consider. Do I want to take this now and have forgiven now so that I have to do that here in 2020? Or do I want to wait for my loan forgiveness for 2021 and hopefully a bill finally does get passed that lets me claim those expenses? So that's a thought you need to think about. So I just wanted to show you that. Next slide, please. And yeah, so those are the changes we're looking for. Go ahead to the next slide. All right, so I just wanted to offer you guys a 30-minute consultation if you'd like to discuss any of these things. That shows the link that is in your PowerPoint presentation that you're giving out, and I am just now throwing that into the chat too. So if you'd like to have a little discussion about any of these things, I'd be more than happy to do a discovery call with you. Thank you very much for your time, and hope you enjoy the rest of your day.
Thank you, Bev. We'll now be moving on to our city update presented by Jim Chandler.
Hello again, everyone. I just want to take a moment to thank each of our three speakers, Beverly, Deirdre, and Alicia. I thought the information was terrific. And I would strongly encourage any of our participants today, if you're interested to learn more about any of these programs, please follow up with any of the three. I know it's a lot of information all at once, like with all our roundtables, wanted to hit on a lot of different areas, but strongly encourage if there's something specific that is relevant to your business that you contact these folks, and I'm sure they would love to have an additional discussion with you. So again, thank you on behalf of the city. That was terrific. I'm going to touch on a couple of different areas. Certainly, if there's any questions specific to one, please feel free to throw it in the Q&A, and we'll monitor that. First and foremost is our pandemic relief fund. As many of you are aware, earlier this year, the City Council allocated $1 million to reducing the impact of economic hardships related to COVID. One portion of that was dedicated for businesses, and we had funding available for our businesses, small businesses, businesses that are minority-owned, business, women-owned or veteran-owned. And then we had funding set aside for working artists and for childcare providers. So both of the The business and the MBE, WBE veteran funds have been expended. We have received a very good response to those, and certainly worked to ensure that those monies were, quickly provided to those applicants. We do still have funding available for both our Working Artist Fund and for our Child Care Provider Fund. If you are aware of any of those folks who are struggling, I would strongly encourage them to come our way, and our application materials are on our website. If there's any questions they have related to either of the funds, we'd be more than happy to answer them. We received very positive responses in both, but certainly for working artists and for child care providers, there are less of them. But I think their communication avenues tend to be less sort of networked in than our licensed businesses who we have more regular contact with. Second is the county and the city have enabling legislation that allow for temporary outdoor seating. And what this is if your use and occupancy permit that is issued by the county, it limits you from either having outdoor seating or limits that outdoor seating, the county has allowed you to expand that use. And so there are some hurdles to jump over, although my understanding is that those hurdles have become a little bit easier to navigate. But it effectively requires you to temporarily request an amendment to their use and occupancy that allows this expanded use. You're required to demonstrate that your patrons can socially distance while being seated, that there is safe pedestrian egress, that your pedestrians are protected from any motorized vehicles. And so we've had some inquiries. We haven't had that many takers on temporary outdoor seating. If you are interested, the city's program is listed on our website. Certainly, again, if you have any questions specific to the temporary outdoor seating program, please feel free to contact us. We have an agreement that is pre-scripted that we'd be more than happy to share with you. And right now we've extended agreements through March of next year. Certainly, as we get into January, February, we'll evaluate that date. And certainly if we're in this same place, we're going to be very likely to extend those agreements throughout the summer of next year and into early fall. But if you're a business that would benefit from some outdoor use, I'd strongly encourage you to visit our website and take a look into the temporary outdoor seating program. Third, the city has for many years had a commercial facade improvement program. We recently made awards to 3 local businesses out of the commercial facade improvement program. Kavi Coffee up at University Town Center received an award of $15,000. Maryland Meadworks received a grant of $5,000 in wheels decorating on Baltimore Avenue. Also received $5,000. It's a smaller pot of money than we're used to administering. Part of it was timing of the state of Maryland's community legacy application cycle, which was understandably delayed as the state was trying to figure out if that funding would be made available and to what extent. And so fortunately, the state did open up a community legacy round. The city just recently, as of last week, submitted an application. Unfortunately, we're not going to know about those funds till sometime, maybe end of this year, early next year. So in the meantime, the funding that we did have available, we wanted to ensure we could fund projects out of. And so certainly limited number of awards. We received somewhere around 200 $50,000 worth of funding requests, and wanted to ensure that we selected projects that were scalable and were able to be delivered and sort of shovel ready. And so I suspect if we receive funding from the state of Maryland, that during the 2021 cycle, we'll be able to not only issue more awards, but those awards to be a little bit more substantial and consistent with previous years. So the city's other program of note, our quarter investment program, Mayor Hollingsworth 2 years ago introduced this program. This is the second round of funding. We received a really good response. And about a month ago, the City Council made awards of $30,000 to local businesses. And for those not familiar with the quarter investment program, the intent of the program is to fill in those gaps for some exterior improvements. So things like outdoor landscaping or seating. We also use the funding to help support the business's operation in terms of planning for social media promotion, or if you're updating your website. And then the last category is if you're using that as an equity match to pair with the city's commercial facade improvement program. So still a relatively new program. Certainly at this point, we'd say it's very popular. It's something I think moving forward next year, going to seek out funding again to fund a round in FY 2022, so it'd be calendar year 21. Timing, I think we'll have a better sense during the January roundtable of what that funding round is going to look like, and certainly we'll keep all our folks apprised. Lastly, and I think we touched on this a few months ago in terms of business licensing, Christine Redmond, who handles all our licensing and inspection scheduling with the city, is here today. Christine and her staff work with you all on having your inspections scheduled, and certainly we've made an effort to schedule those inspections around off-peak hours. We don't want to impact your business or inconvenience your customers, and so if there are times or days which are better for you, we've opened up our calendar a bit in terms of our code inspectors coming to conduct those licensing inspections. And so now we offer Saturday inspections and early evening inspections, and certainly early morning. So if you haven't spoken to Ms. Redmond about licensing, please feel free to do so. If for whatever reason your business is closed and you do not intend on opening, at least in the short term, let us know, and what we'll do is we'll push your scheduling of inspection down the road a bit. Certainly we don't intend on inspecting spaces that are not open or do not intend to open. But if you are open for the public, please make sure that your licensing is up to date. Next, I'm going to turn it over to Kate Powers. Kate is actually running the back end of this meeting, but Kate is our city planner. She's going to touch on two planning related items that I think to some degree affect business owners on this call. And certainly if there's any questions here, I would be happy to answer them.
Hi, thanks, Jim. So two additional city items. First, we have the West Hyattsville Queens Chapel sector plan, which is upcoming. MNC PPC recently conducted a virtual kickoff meeting, but you will hear much more about it. Representatives will also be coming to City Council, as well as to our planning committee meeting, which is actually tonight. Basically, the sector plan lays out different design standards for an area. And so the West Hyattsville sector plan is being updated. And that will happen in, the next year or so. The second item we have is the countywide sectional map amendment. That has been ongoing, and due to COVID has sort of been pushed later. It will likely be adopted in early 2021. There's an upcoming joint public hearing that's scheduled in November. If anyone would like further details on either the sector plan or on the countywide sectional map amendment, please feel free to reach out to me. Thanks.
Thank you, Kate. Before I go any further, Ms. Redmond asked that I add our Hyattsville make a payment into the chat. And so this is for our business licensing. One of the things, in talking a little bit earlier about flexibility, so we did launch online payments. Now your business licensing fees can be paid online. Certainly, we prefer not using cash or check. So this automatically generates a receipt for you. So it's one less piece of paper for you to keep track of. So I included it in the chat function. So if you've not already submitted your license application, there is where you go to make that payment. We are reaching the end of our agenda today. The last piece that we have, and thought it was important for you all to be able to hear from some of the folks who are your peers. And so we have three terrific panelists today. First is Erica Nisborowski, and she is a local photographer. We have with Camp Space, Patrice. Make sure I have everyone's information here. Patrice has operated Camp Space now for a number of years. It's a shared workspace. And we have Mike Franklin, Franklin's Restaurant and Brewery. And so, Kate, let me know once you have each of them promoted to a panelist.
All three should be promoted. Please use the raise hand function if I missed anyone.
Hey, Patrice.
Hi.
All right, I see all three. So the intent of the peer-to-peer is, really share some of the experiences each of the three of you have had. And I know Lillian has touched base with you over the past couple of months. So I'm gonna start with some questions here, but we'll kind of see how this goes. And just Erica and Patrice, because we haven't had a chance to touch base that much, and I want to sort of start everyone off with a leadoff question that I think is relevant for everybody. So for the both of you, like, what's the one word you would use to describe your experience over these past couple of months?
I'll go first, I guess. At first, the first thing that came into my mind was creative, but I don't know if that's like the right tense. So I'd say interesting, because it's just been like this kind of roller coaster. It's all just been really interesting. The things I've learned personally, the things that I've found out about, like all the resources have been just totally interesting to me. And just kind of how my business has had to make some interesting shifts.
I would say everyone's been saying that they are pivoting. I have contorted myself. So I would say contorting is the one word that I would use.
And Mike, I will challenge you to use one word.
I'd say evolving.
Okay.
Just trying to be flexible, learning new tricks, learning new things to do, different ways of doing things.
Okay.
And that's constantly evolving.
And Mike, I have a follow-up question for you, because I think this is probably most relevant for you, and I'm not sure everyone has sort of seen the way that you've adapted, but what's can you tell everyone about the ways that Franklin's has adapted to meet the current mandates, but also try to address the customer behavior, understanding that we're all trying to comply with COVID guidelines?
Well, I mean, in a nutshell, I'd say we're trying to interact with our customers the way they want to be interacted with. We're a very cautious, thank goodness, in a way, area where people are going to obey the rules. And therefore, and when this first started, we started out with, in the restaurant part, with curbside delivery and carry out. Launched delivery, which I never in a million years thought we would ever do. Took a while, but we pressed for outdoor seating, and it took a couple months for the county and the city to be able to put rules in place that allowed that. But once the weather turned, people wanted to be outside, and the outdoor seating is where they wanted to be. We could have 20 tables outside and 0 inside. And we changed our website, we changed our social media to be much more proactive. Just the list goes on and on. But, I guess the best way to say it is evolving to adapt to how our customers want to interact with us.
That's incredibly helpful, Mike. And certainly your transformation's been a little bit more visual with the outdoor part. I guess for Patrice and Erica, how have you both really worked to maintain a connection with your customers?
Well, I've been reaching out. I'm big on networking. I've stayed in contact with everyone. In the beginning, I was just getting a lot of cancellation emails. A lot of my clients book 3, 6 a year out. And so it was just blow after blow of it being canceled or postponed. And so I've just been trying to stay in touch with them and find ways where we can adapt and still get some jobs done.
With having a physical space and people not being able to leave their houses, like business was shut down for 2.5 to 3 months. And, it took not long for me to realize and understand that I needed to figure out a way to keep Camp Space top of mind, whether people were in the space or not. So this created a very unique opportunity for me to be creative and find digital content and digital ways to get in the hands of people who obviously wouldn't be able to come into the space. So about a week into the pandemic, I launched a podcast, which is something I had always thought about, but was never really forced to do it because, when we're comfortable, we just kind of do what works. But I was forced to figure out a way to share Camp's mission. And so I launched a podcast in late March and then decided to launch a video series that just kind of talked about our customers more. And so I never thought about doing that before. And it's been a great way, pandemic or not, to reach so many more people, right? Because only a finite number of people can come into the space. That's a fact. But a podcast can be in everybody's, it's an infinite amount of people that can listen to the podcast and to learn about Camp Space. And even more people can watch the video and see the space, even if you're, all the way in California or, across the globe, you can still connect and learn about the space. So that's the biggest change that we've made that I did not think about before.
That's awesome. It really is. It's one of those, you hear people say pivot and pivot to what? So I think Patrice, that's a great example of sort of stepping outside the comfort zone to figure out another way to get that name and to get that use. in the hands of those customers. Guess I'll pose this to all three of you. When it comes to small businesses, what are you most optimistic about?
I'll go. So and this is, definitely for my small business. I've just been really, it's been interesting to see, so we had a pandemic and then there was a racial reckoning where the country had to stop and really pay attention to what was happening to people of color, primarily Black people. And I am, it's unfortunate that it's taken this long for business owners like myself to be put in the spotlight, but it's really been amazing to see how the country, how customers have how media outlets have made it important or made it top of mind to pay attention to and support small businesses of color like myself. And so I think that will continue. I hope that will continue. I hope that I think it's twofold, right? So now that this spotlight has been shed and has been shined on people like myself, I think that it will also cause more creatives and more small business owners of color, more women small business owners to step up and say, you know what, I can do this because now I see so many more people doing it that look like me. So I really do see this change or this shift in just shining more spotlight on diversity, because it's important to have all people being represented and to hear all voices.
Great, thank you.
For me, I'm optimistic on a couple of levels. One, I feel like our customers and Hyattsville surrounding jurisdictions have such a greater appreciation for all the local businesses. They've had time to really think, oh, this is really important. These are the kinds of businesses that I don't want to live without, and they have. There's a recognition that, not to say that any of us were taken for granted before, but I think there's just a greater level of appreciation for all of what us local businesses do. And on the survival level, I'm optimistic about how flexible the city of Hyattsville and Prince George's County government have been, and how they've recognized that, again, the survival of small businesses is really important. And on this, for example, the outdoor seating, I feel like there will be a recognition that, yeah, this is so important that this is going to have to be permanent rather than temporary in order for some businesses to survive. So we're looking at Brewers Association, for example, are getting the laws changed in Annapolis to make all the changes that make all delivery of alcohol as possible, and makes things like our outdoor seating possible. I'm optimistic now that those things can happen, and that I'll be able to work with the city and the county in order to maintain some of the things that consumers really have enjoyed, like the outdoor seating and the delivery. And that the city, since we're talking in the city will continue to be really flexible and forward-thinking on how they enforce different things and what sort of programs get put forward in the future.
Erica, I don't know you had a chance to respond to this question, so I want to make sure we get to you.
Yeah, thank you. So my business is different, where I don't have a brick and mortar. I work out of my house, my home office, and then I go on location. And as a photographer, I have to meet face to face with my clients. And majority of my clientele was, businesses, corporations, government, other small businesses, museums, and they all closed. But what I've noticed is I'm getting, calls from my clients for me to do some personal work for them. And so I am optimistic. I know that my clients will be there when we open back up, and they're there for me in a really small form now, having me do family photo sessions or outdoor headshots, whatever is possible. And I've been able to adapt to that. But I know that they're going to be there when we go back.
Erica, I'll go back to you with this, and I want everyone to give some thoughts sort of as we wrap up. But what's the one piece of practical advice that you would share with your peer small businesses?
Don't give up. The first few months entering the pandemic, I was super unmotivated. I couldn't work, and I had no creative juices flowing because of that, and I just kind of checked out. And then I got a call, and suddenly I got a few jobs here and there on a really small level. But don't give up. Keep pushing forward. The city is here for you. And I'm so thankful that I did get the Working Artist Grant, because it gave me a reason to move forward, and it helped me. And so just don't give up.
Patrice or Mike?
Sure. I would agree with Erica. Like, don't give up. You really have to be relentless. And to be more specific, there's money out here. And so you have to connect with, I was on another panel, and a lot of the people on the panel weren't taking advantage of the local resources. And I mean, the city of Hyattsville has been just so amazing with supporting what we're doing here. And so, I'm assuming everybody on this call is local, but, just really tap into that local network, and not just to get money, but just like to have conversations. Like, I was able to actually meet Lillian face to face yesterday, and we'd emailed before, but we had never actually seen one another. So like, reach out to people, introduce yourself, step out of your comfort zone, because those relationships are really what matters at the end of the day.
Mike?
Yeah, I agree. I mean, ask for help. I mean, it's been very humbling. The whole experience of COVID is very humbling. And don't be afraid to ask for help not just from city, but ask for help from your customers, ask for help from other business owners. I know I'm personally glad to answer anybody's questions, any other business questions, if I could be helpful. We're a community. It's really hard to network with other businesses right now, but please reach out to each other, because we are all in it together.
Thank you, and thank you each of you for sharing your perspective on this. I know it's I think we recognize Hyattsville is a city. We try to be helpful where we can, but certainly hearing some of the experiences that you all can share with peers is going to resonate more. And certainly thank you for your willingness to speak a little bit about your experience. So we're going to wrap up. And we'll let everyone know that. So we've recorded this. So if you would like to share this with anybody you think it might benefit from the programs or hearing about some of these experiences, please feel free to share it. I know Lillian will send out the link directly, but we will later this week, as part of Economic Development Week, we're going to be sharing a profile on some development. Our fall 2020 Economic Development Report will be out, and so digital format will be out this week. A printed format goes to all Hyattsville households in early November as a pullout. And then on Friday, we're going to be announcing the start of our Shop Hyattsville for the Holidays campaign. We're going to look to start that a little bit earlier this year than we did last year. But certainly, we're going to try to be as helpful as we possibly can to support our local small businesses. With that, I'd like to say thank you for joining us, and have a good rest of your week. Take care.